Estimated quarterly taxes represent a fundamental requirement for independent workers and self-employed individuals in the United States tax system. Unlike traditional employees, who have taxes automatically withheld from their paychecks, independent workers must calculate and pay their taxes directly to the Internal Revenue Service 4 times throughout the year. This pay-as-you-earn system ensures that tax obligations are met gradually rather than in one large payment at year-end. Understanding this system is crucial for anyone earning income without automatic tax withholding, including freelancers, contractors, and business owners. The difference between traditional employment and self-employment is significant when it comes to tax payments. Traditional employees benefit from automatic tax withholding, where employers deduct federal income tax, Social Security, and Medicare taxes from each paycheck throughout the year. This happens seamlessly without any action required from the employee. However, self-employed individuals and independent contractors receive their full payment without any taxes being withheld. This means they are responsible for calculating their own tax liability and making payments directly to the IRS. The quarterly payment system was established to mirror the pay-as-you-go approach used for traditional employees, ensuring steady tax revenue collection throughout the year rather than waiting until the annual filing deadline. The tax year is divided into 4 payment periods, each with specific deadlines that must be met to avoid penalties. The first quarter covers income earned from January 1st through March 31st, with payment due on April 15th. The second quarter is slightly shorter, covering April 1st through May 31st, with payment due on June 15th. The third quarter spans June 1st through August 31st, with payment due on September 15th. Finally, the fourth quarter covers September 1st through December 31st, with payment due on January 15th of the following year. Notice that these quarters are not equal in length, and the due dates don't fall at the end of each quarter. It's essential to mark these dates on your calendar and set reminders well in advance to ensure timely payment. Not everyone needs to make quarterly estimated tax payments. The IRS requires quarterly payments if you expect to owe $1,000 or more in taxes after accounting for withholdings and deductions. This requirement primarily affects 3 groups of workers. First, freelancers and contractors, including independent contractors, consultants, gig economy workers, and anyone receiving 1099 forms instead of W-2 forms. Second, business owners operating as sole proprietors, partners in partnerships, or shareholders in S corporations who receive income that isn't subject to withholding. Third, anyone with substantial income from sources like rental properties, investments, or other ventures without automatic tax withholding. If you fall into any of these categories and expect significant tax liability, you're likely required to make quarterly estimated payments. Calculating quarterly estimated tax payments starts with determining your expected annual tax liability. The basic formula is straightforward. Divide your expected annual tax liability by 4 to get your quarterly payment amount. Your expected annual tax liability can be estimated in 2 ways. You can base it on your previous year's tax return if your income is relatively stable, or you can estimate your current year's income and apply the appropriate tax rate. The calculation should include federal income tax, self-employment tax which covers Social Security and Medicare, and any applicable state taxes. For a simple example, if you expect to earn $80,000 and your effective tax rate is 25%, your annual tax liability would be $20,000, making each quarterly payment $5,000. Let's walk through a concrete example using a straightforward calculation. Assume an independent contractor expects to earn $80,000 in annual income. They estimate their combined tax rate at 25%, which includes federal income tax and self-employment tax. To find the annual tax liability, multiply $80,000 by 0.25, which equals $20,000 in total annual taxes. To determine the quarterly payment, divide $20,000 by 4, resulting in $5,000 per quarter. This means the contractor should pay $5,000 by each of the 4 quarterly deadlines: April 15th, June 15th, September 15th, and January 15th. This calculation provides a baseline, though actual amounts may need adjustment based on deductions, credits, and fluctuating income throughout the year. Failing to make quarterly estimated tax payments on time or paying too little can result in significant financial consequences. The IRS imposes an underpayment penalty if you pay less than 90% of your current year's tax liability, or if you pay less than 100% of your previous year's tax liability. In addition to penalties, interest charges accrue from the due date of each quarterly payment until the amount is paid in full. These interest rates are set by the IRS and can add up quickly. However, there is a safe harbor rule that can help you avoid penalties. If you pay at least 100% of your prior year's total tax liability spread across the 4 quarters, you generally won't face underpayment penalties, even if your income increases significantly during the current year. For high-income earners above $150,000, this safe harbor increases to 110% of the prior year's tax. Successfully managing quarterly estimated taxes requires organization and planning. First, mark your calendar with all 4 quarterly deadlines and set reminders at least 2 weeks before each due date to ensure you have time to prepare payment. Second, maintain detailed records of your income throughout the year, as this allows you to make accurate estimates and adjust payments if your income fluctuates significantly from quarter to quarter. Third, use IRS Form 1040-ES, which is the estimated tax worksheet provided by the IRS. This form helps you calculate the proper payment amounts based on your specific situation, including deductions and credits. Finally, consider working with a qualified tax professional or accountant, especially in your first year of self-employment. They can provide personalized guidance, help you understand deductions you may be eligible for, and ensure you're meeting all your tax obligations correctly. Remember, staying proactive with quarterly taxes helps you avoid penalties and reduces financial stress when annual tax filing season arrives.
If you like this video, hit that like button and don't forget to subscribe. Visit CodeLucky.com for more such useful content.